Welcome everybody to the trading room. It is the 17th of May, already halfway through the month. It's incredible. And we have gone nowhere. What do I mean by that? Well, we'll get there in a second, right? Let's share some ideas. Let's take responsibility for the outcome. You guys know the drill. So one thing that I've been noticing over this, watching paint dry over the last month or so, is that there is movement. There's quite a bit of movement, up, down, and sideways. All three of these the majors here, and specifically the indices, the diamonds, the spiders, the Qs, what we trade, have been slowly trending, and the Qs are moving slightly higher. We'll see the charts here in a minute. Sideways on the SPY, and the diamond slightly lower. I've seen a lot of consistency in weakness and strength when it comes to sectors. They haven't changed much since April. But it's just been this really low, dull move. Now, a lot of you I've talked to out there haven't really gained or lost much, including myself. There's just nothing really happening. So sideways in all three directions will work. I'm starting to see things that are a little bit more specific, some of the larger tech names that are actually moving a little bit more to the bull side, and some of the beat-down utilities and energy moving more towards the downside, and some of the materials. So, excuse me, folks. Okay, so let's get into our market sentiment. It's bullish to neutral. We're getting reactive trading based on earnings. Things that are good go up. Things that are bad go down. It's kind of cool. So I am a fan of trying to play things after earnings. It's been a little bit more volatile than I'd expect on some of the trades I've looked at. I haven't been triggered because I want to implement more sideways. Economic data, I really think, is just yesterday's news. That's no pun intended there. But it is showing contraction. We had a couple pieces of news we'll talk about today. So it's going the right way, which means the Fed should slow down. We do have a bunch of Fed talk coming out tomorrow and believe into Friday. We'll pull up the calendar here in a second. So it's kind of more of the same. It isn't too bad out there, and it's just not overwhelmingly great either. So we've been pushing a lot with the credit spreads, something to do with some sort of credit side has worked, will work, diagonal stuff. I still believe in that, horizontal stuff, and butterfly stuff. So nothing's changed. It's been pretty consistent, which is kind of good. It's just difficult because the timing might be slightly off, or trades might not come to fruition in time before they expire. So if you guys want to scale back a little shorter term, the diagonal guys out there should be doing a little bit better as long as you're patient. Once again, I haven't seen too many trades that have really knocked anyone's socks off. So it is just kind of mundane, which is unfortunate because we're going into summer, which is renowned to be slow. So we'll see if we get a hiccup here based on maybe the debt ceiling or who knows. Here's our trade ideas. Microsoft CRM from 2 weeks ago. Microsoft from last week. I did like those on the bull side. Netflix is still holding neutral. It actually has a bull move. It goes up and down. It's kind of range bound if you wanted to play it. But for you Condor guys out there, this has just been a dream. If you're wide enough, they've been really, really good. So I still think it holds in there. W from last week looks good still. Is it Moderna? mRNA, we'll take a look at that. Philip Morris and Intel still hanging on the bear side. So let's go take a look at those. I didn't pull the chart, so we're going to go live and take a look at them. There we go. So let's start with Microsoft. I have seen a lot of these companies move. NVIDIA, Microsoft, Apple, Intel. There's a lot of things out there, well, Intel to the downside, but there's a lot of things out there with this AI, and I think that's kind of the next hot topic, the hot thing. And so when you have some of these larger companies leading and they're just speaking about it, I think Microsoft acquired an AI company or things of that nature, it's really hard to fight that. So these things can stay high and go gangbusters for a while. Keep that in mind if you're afraid to pull the trigger on one of these. So let me zoom in here, stretch it out, pull down. That's one thing I like, that when we go live, we can manipulate the chart. It's just nice and tight around this 310 mark. I believe that we're seeing something sideways to up on this, and it still looks really good. It's expensive. This is a trade I actually was working on yesterday with a broken wing butterfly, but I couldn't get the price right because I wanted to target up to 320, and I did not get, the volatility just ate up my risk reward. It wasn't really worth it to me. However, an at the money horizontal of 315 would be pretty decent here. Or if you've got it with only 2-3 days left, You could sell that the three. I think it's got a 312.5. If not, the 315. Sell right at the money. Buy a 310, something pretty tight because it's got that real nice tight move through here. So I'm expecting a little bit more of the same there. Now this can obviously do something like that if we get a surge, if something bullish happens. Being in the tech sector itself, I'm definitely going to lean +1 at least. I'm going to lean to the bull side on everything in the tech sector. This could easily pop up. We get bad news, well then, of course, bad news is bad news. So barring any sort of black swan event, I shouldn't use that so liberally. Unexpected event, something that panics the markets, we get a huge flush out. Yeah, you'll see these drop, but they might correct themselves. So I'm not really planning on anything but this. All right, I used Microsoft as an Outlook example for myself, and you guys had to listen to it. You're welcome. So let's go on to CRM. Salesforce is looking really good still. It was great last week, and it's just wonderful. We looked at it as an ascending triangle breakout pattern. Let me draw it here before I zoom in, but look at this thing. It's really nice. It chopped around. That's pretty volatile, but it's slowly climbing. So when we talked about something sideways to up, if you were sideways to up when we talked about it last week, you're doing great. Awesome job. I'm jealous. All right, so let me stretch this out, pull it down. And it's still looking pretty good. It's chomping around here. It looks like it wants to climb up towards that 210. Understand, guys, when you do something sideways and you get a stock that gaps, these are gaps. Gap, gap, this gap down, moved higher. Here's a gap up today. It's going to destroy your P&L. It's going to give you a heart attack. I had a conversation with a trader the other day saying that, yeah, I'll see my P&L down $1,000 and then at break even up $500, and because of the position size and how volatile that the position is. You just have to grin and bear it. Don't follow the P&L and just keep an eye on the overall chart, because if you take a look at what's happened since this breakout that it had last week, it's up. That's it. This is going to cause ulcers. So try to quiet the noise, stay away from the day-to-day stuff, believe in the overall pattern, and trust in your position. Still like it. I still like it. For you guys that didn't get it last week, I still think it's a good trade. Let's get to our sideways stuff. Let's go to Netflix first. And Netflix has an argument where it could be range bound. This could have been something that you guys could have played as a bull pullback. It's setting up for a beautiful bull pullback right now. Let's zoom in. When I zoom in, I take away the range. I make it a little bit wider. But I believe we're targeting somewhere through this range here. And it's well within it. The 350, 320 area. For you Condor guys, maybe 350, 360, 320, 310. Those are difficult for me personally because you're making a buck, risking 8, 10, whatever it is. 9 it would be. So, however, I do like it on a move higher. This pullback has been nice. So all of a sudden, I'm thinking this is more of a glass half full situation, but I still respect the 350 resistance. So anybody that wants to play it as, hey, I'm going to get in here at about the 338 level because it is confirming a small bull pullback with a target of 350, that's a good move, right? And I like it. For you guys that want to keep your range, stay with the range. It's not going to break 350. Great. Stick with that. It's all a timing issue. For you guys that think you're not ready for it, wait for this to get up to the 350, and we've got ourselves a beautiful ascending triangle breakout potential with a target of 370. So Netflix still has a whole lot to go. I actually literally just sent an email to one of our traders today about the top-down approach and does it work for everybody. And my response was I can get the same chart that 5 other traders could, and when one of us could make no money, one of us could make a lot, and one of us could break even. It really depends on your timing and your outlook in the overall chart. I just talked about 3 different scenarios with Netflix here, folks, and all of them are viable. Maybe 1 or 2 of them will work, but all of it's going to be based on your approach to it and your management of the position. And it's very frustrating to compare yourself to traders, right? Sometimes everything I touch goes to crap, but everything this guy touched is great. It's just circumstance. But I do like all of that situation on Netflix, and I think it's one that you should have in your watch list, especially if we're going to continue this sideways stuff. And once again, this is in the Qs. This is a tech, so it's going to be a little bit more bullish than the others. On the other side, we got consumer cyclical. This is Wayfair. This was a sideways trade from last week, and it still looks super sideways. Zooming out, pretty obvious to see. Zooming in, it might get a little bit more muddled because this might be a potential consolidation move to move back up to this 40 area. Either way is fine. You can bite off a larger chunk by playing the sideways up to 40, and boy, I'd be comfortable right about where it's at, 35. Playing something tight through here. Take into consideration shorter term. I don't need to be between 35 and 40 for the next month and a half. How about the next week? How about the next week and a half? Now, I'm okay if you want to be between the 35 and 40 with a month and a half out if you're selling the 40 for this week and the next week. Things of that nature. So however you want to play it, it works. But it has been sideways for a while. A little bit of a range hiccup here. But it did stay, well, that's about $10. But it looks like it's back on track to go sideways. These are tough markets to do. Sideways is tough for a lot of traders, longer term, because when we consolidate, what we've learned here at Maverick and what I teach a lot of people is eventually it's going to snap. Eventually you stretch that rubber band, it's going to snap up or down. It's going to pop. And the problem is we just don't know when. But waiting for it, we're either going to have to sit out of the markets for a long period of time before we see a breakout or down, or we have to just try to sell that sideways stuff, sell credit spreads, take advantage of sideways until we do get caught with our hand in the cookie jar, right? Maybe we got 6 sideways trades and the markets break out. Oh well, at least you made money for that little bit of time. It's up to you. It depends on the attitude and the personality of the trader. So that's what I got for sideways. That's what we got for sideways from last week and this week. Let's take a look at some bears here. This is Moderna. This was a great bear. Beautiful potential of a descending triangle breakdown, and it absolutely did. Taking a look at when we're zoomed out, it's easier to identify. Let's zoom in a little bit more. But that was a really great trade. Great work, guys. And if you're still in it, it's still great. Right through here. Looks like it took its time, but it slipped yesterday. It might look like it might want to recover. So if you're in a diagonal spread, this is exactly where you want to be. For you guys that aren't into this yet, maybe you wait for a couple of days to see if it indeed does move higher, or if it decides to consolidate, then go ahead and hop on the diagonal bandwagon. I would suggest, obviously, skewing from last week to this week on expiration cycles, and maybe even strike prices. You might want to lower the whole thing a little bit lower. Just kind of reduce cost. But it's a great chart. And let's go to Philip Morris. Consumer defensive, been beat up as late. I don't know why, but nobody seems to be it. Everyone's getting into tech again. Same idea, descending triangle pattern. This one doesn't seem like it did much. I think it came down and then had a bounce that we had to sit through from last week. But look at it, it's right back down to where it was, which is fine if you have that diagonal spread. You're patient, you're comfortable. This is pretty decent. Looks like it's breaking down again here at about that 93. So pretty steep slope here. Back crossed over. See, we had the cross back as it rallied because of this move. That's basically what it was. But we're right back down to that area. We got a really clean target here at about 90 if you want to just put this on it. Just slow play it, meaning go out June maybe, and then you can sell each week or whatever you want to. But it doesn't seem like it wants to go higher anytime soon. Let's get to Intel. All right, so here's Intel. Same idea. Zooming out, you can see this did show a little bit more strength than you thought it would. But boy, look at this. Gapped up and just didn't quite make it. That's because we got a crossover. Cool. Let me zoom in on that. Because we didn't have that last week, but we do got it this week. Nice. So we got a bearish crossover going on right at a support level here. Let me draw the line right there. Right below that 30 mark, we'll call it. Yeah, and it's starting to roll down. So we've got 28 as a target. We got an extended target here at about 27. I'm super cool with credit spreads, bear call spreads, diagonal spreads, a targeted horizontal spread, butterfly spread, anything that's showing a slow bleed. Now it's interesting because this is in what I would call the wrong sector for a bear. So don't get too aggressive with bearish direction, although Intel is definitely out of favor comparatively with some of the better software companies, although Intel is a semiconductor. But all right, so don't get too aggressive in direction here. I'd be more fine with it staying right around 30 or slightly lower. Awesome. So great trades, everybody. They're looking great. They've been doing great. It's just, like I say, it's where you find it. Or and how you play it, I should say. Let me get back to the slideshow. So let's get into our market analysis. And overall, just flat. Right? This is Monday, Tuesday into Wednesday. The Dow is slightly lower, down 0.23. The SPY is slightly higher, 0.24. The NASDAQ is up over 1%. This is exactly what I've seen in the overall charts. You guys can see them all in front of you. Take a look at them before I start zooming in, and you can see consolidation tight, the Dow diamonds, descending triangle pattern, the Qs parabolic. Kind of a 45 degree up way above its moving averages. Three completely different stories. The Russell up about 1% here. The oil has had a bounce. That's what this is. It's a pretty good bounce. And then gold is just having a little bit of a pullback. I'm not going to chalk it up to anything past that because there's just really nothing behind the news that's going to show any sort of longevity except for this chart. So don't look too deep into it. So here's the SPY. This is this wonderful area of consolidation to where, hey, let's just go ahead and play something sideways. We've got a bank situation we had a while ago that seemed to correct itself. The fear's kind of out the window. We're expecting a slowdown in the economy, which we're seeing economically. Okay, so we imagine lending might get a little bit tighter, more restrictive, and we're also going to get a consumer that's less demanding. So this should be kind of bearish, right? But overall, the economy is not falling apart, so it's just going to consolidate. Now, on the other side of that, when you get a little bit deeper into this, let me do some new lines, you'll get into more of tight consolidation, stretching that rubber band, right? Markets will squeeze and squeeze and squeeze, and then something will go. It will pop up or down, and it's not going to need much to jump. However, that could be a month from now. That could be in 3 days. You just have to play it based on your outlook. You make sure you don't overextend yourself regardless of which direction you agree in. It's easy to play these as they break out. It will be after the fact, so it'll have to break above maybe the 415 plus, 416, or fall apart with some pretty bad news and break below moving averages, right? 2 moving averages and this 405 level. It's going to be super volatile when that happens, and if we're sideways, we're just kind of stuck with it. But if you are a directional trader, this is not the sector to be in. And this is a very difficult one for you. It should be. All my directional traders are struggling right now, including my directional trades. Let's take a look at the diamonds. This is more of a descending pattern. Look at the difference in the moving averages. They're still correctly, the 20 is still above the 50, but it's rolling over here, a flattening 50, declining from a previous high, a lot more ominous, right? I'm thinking something that will break below that 330, so I'm going to be super bearish. Well, at least a little bit more leaning towards the bear side. We're already threatening the 50-day. We're already below the 20, but I've seen this thing hang in there too many times. Here's a bounce. Here's a bounce. It never quite, after this fall, it climbed back. Well, so did everything else, but it's just not confirming the fall that I want to see to be -2, -3, right? Right now, just with the chart, with the moving averages below the first, descending, you have to be -1, but it's not confirming when it breaks. It comes back. So sideways to -0.5 on that one, right? So let's go to the Qs. Complete different story. It's like we're looking at 3 different time frames and 3 different areas of the market. But no, this is all happening today. Very selective in the strength of the higher flyers. So the majority of this move in the Qs is going to be 8 stocks that everybody just loves, but they're all tech, they're all fluff, they're all excited. It's just kind of a euphoric move. But look what it's done. You can't fight this. Any of my bears out there that believe this is overextended, I agree. But don't get in its way until it decides to break down. Above its moving averages, both moving averages are sloping higher, breaking out of resistance. This is almost a +3 chart. Well, basically, it would be a +3 chart. So I've got three complete different reads on three complete different sectors. What they all do have in common, including the Qs here, is a little bit of a sideways element. Even this little surge that we've seen this week, there's still sideways to it, and not all, like I said, not all tech is participating in the move. So we do have to be a little bit more selective. I gotta hide that VIX slide. All right, so let's go to, and by the way, the VIX isn't doing anything. That was an older slide, but the VIX, if you want to check it out, isn't really helping me at all. And it's an indicator that I like to use quite a bit. I used a lot of it at the end of last year, waiting for it to pop up and things of that nature. But now it's just, boy, it's not even, I can't get a read out of it. Side note. Okay, economic reports. Let's take a look at them. Here, the retail sales. So this is the one that came out today that I was looking for, and it contracted. You know, previously it was down a lot. Expectations were 0.5, and it's 0.4. This is, I think one is X autos. There it is, core retail sales. One's retail sales with automobiles, one's without. But you can see it's not a negative number, but it's showing a slowdown. This is actually positive. We're seeing a retail sales that is actually slowing down, but it's not falling off aggressively. That's positive. It means we're slowing down, what the Fed wants to see, which could be something that would move the markets higher. Where's the other one that I was looking at? Empire State Manufacturing. Nope. Housing. That's what I'm after. Sorry, folks. I can't even see it. Empire State Manufacturing here. Oh. So here is our housing index. A little bit more optimistic. There it is. It's down too far low. But building permits are slowing. A little bit of a drop. Not catastrophically falling apart, but slowing. Small uptick in starts, that's fine. Once you get your permit, you got to start the house. But now this one's more of a leading indicator, the building permits. We're starting to see a little contraction there. Not a fall off, not a panic, but it's good. It's healthy. So if we continue that, the markets are going to see this as optimistic. So what do we have left? Not much. Like I say, just some Fed speak for the rest of the week anyways. And the unemployment claims. I'm going to keep an eye on this bad boy here. I'd like to see it in line. We don't want to see it drastically increase. That might cause some panic. Or drastically drop. We just want to see it come in line. A little higher, a little lower is going to be fine. But we do have some Fed speak coming up as well. So if you guys want to listen to all these guys, be my guest. I never get much out of it, so I don't. All right, let's pull the class here. Let's do a directional outlook. Let's start with the week. So what are you guys thinking for the week here? Up, down, sideways, bullish, bearish, somewhere in between. All right, good pull here at 84%, stalling out. I'm going to go ahead and close it. Share. So we are sideways, 81% at 0, 19% at +1. Okay, absolutely. That makes total sense. Cool, guys. Thanks. Let's go ahead and launch another one. Let's do the month. Thanks, guys. 57% 0, 29% +1, 21% -1. So a little bit of discrepancy or indiscretion, all right, no, that's not the word. Unknown, we have a bias to the upside, we have a bias to the downside from a 57% flat. But you guys both agree it's going to be sideways, either slightly up or slightly lower. Awesome. Cool, thanks guys. That's a fun thing to do. I like that poll. Hopefully get you an idea of what everybody else is thinking. I'm exactly in line with you guys. I'm going to go +1, and why I am going +1 is I do this primarily off the SPY. If I was doing all three of these differently, let's start with the SPY since it's in front of us. I'm seeing a little bit of a slope on the 20 to 50. It's sloping down, the 20 is, but that high tight base is above the majority, both moving averages, even though it's high, so I have to give it a bull score. Also, the consolidation, ascending or symmetrical triangle pattern above moving averages also gives me a probability of a break to the upside. So I'm a +1 on the monthly outlook, +1 on the weekly. If that slope wasn't there, the slope was flat or moving higher, and it probably would be at the same time, the SPY is up here, I could easily move this up to +2 for the week. So I am definitely glass half full on the SPY, but a lot more sideways overall. I mean, I guess if that makes sense. Now, if this was the Qs, I would be a +2 on the monthly outlook and a +1 at least on the weekly. The only reason I wouldn't be higher than a +2 on the weekly is because it's a little overextended for my liking. When price action moves too high away from my moving averages, I get into this counter trend or the idea that it could pull back or consolidate. So I usually give it less of a bull score. Now on the diamonds, I would be 0 on the weekly and 0 on the monthly. Maybe even -1 on the weekly if we are testing that 50-day moving average. Crazy, right? So how do you trade? Well, you just got to trade those markets specific to your outlook. So if you were to see my portfolio, you'd laugh at it. First of all, it's crap. But if I was supposed to do it the way I was supposed to do it, it would be sideways to slightly bullish in the SPY, bullish to slightly sideways in the Qs, and bearish to slightly sideways in the diamonds. In fact, I've got a slide for that at the end. If you missed it, it's coming back. So let's take a look at the sector analysis, and lo and behold, it's been pretty consistent. The big thing here is the communication services. One point, folks, one of the trades I was looking at was Verizon in the communication services as a bear. It was beautiful trigger yesterday, and it looks sideways. Dang it, I don't know why I didn't have it. Write it down, or else we can check it out here in a second. But I like things that are not going with, that are a counter trend to its sector, because that means it's a kind of an outlier. There's something really wrong with it if it's not moving higher. But communication services super strong. Technology, of course. And look at the bottom. Real estate, utilities. Real estate, I was a little. I think that might correct itself here. But energy and basic materials also in the red. Let's take a look at the chart here. Because with communication services, it's just this beautiful ascending triangle pattern that almost is, it's confirming today. Anybody that wants a trade, here's a beautiful diagonal call. Boy, it might be what I'm looking at. That's a good trade. I mean, even if we churn sideways, this seems to be outperforming. Let's get to our utilities. And this was last week, and it's always fun when I go to replace these charts because they're Wednesday to Wednesday, and I believe it was I'm not going to count the days, but somewhere in this area where we're looking, hey, this could potentially break down and fall and hit that 50-day or that 200 or 50-day moving average. And guess what it did? That's exactly what it did. So continuing to go lower. It might slow down here. It looks like momentum is increasing based on the candlesticks, but this could be another potential sideways to bear trade on the sector itself. Sectors don't have earnings, right? They're usually easy to trade, lots of strike prices, things of that nature. Okay, let's finish up here. So the debt ceiling, now the hot topic, even though I didn't even bring it up until now because I don't really care and I don't follow it. I've ran into debt ceilings many, many times. If you guys remember the Obama administration, I think we had a debt ceiling 6-7 times in a couple of years. Well, they'll work through it. It either goes or it doesn't. The markets react, but even if they do, it's not for very long. That's my 2 cents. If there's something uglier or more of a black swan event, we'll know altogether. But I'm not going to trade on it, but it will create volatility. So strength is in the tech and the communication services. Selective stocks within it with the sideways element. Same with the weakness side. Weakness is in energy, utilities. You could throw in materials in there, but selective with sideways. If you see something outperforming in energy, don't short it. Don't try to. It's outperforming for a reason, but it's okay if something's bleeding lower. Let's go ahead and jump in there, but put sideways on both of these things. Even if the stock takes off in the bull direction on the tech and you're sideways, you'll be, oh, bummer. You just don't make as much money, for instance, like the diagonal spread. It's all right. So sentiment, 3 different feels out there, but all share sideways. How many times can I write sideways in one slide? There it is. Slowing retail sales and building permits. Unemployment claims will be tomorrow. If that number is in line or even slightly higher, I think that's probably going to be seen as good. But we'll see. We'll see. It just depends on how the markets take it. But I don't expect much but more. I'll say it one more time. Sideways. Okay, great. Let's go out and take a look at some trades that you guys want to look at. Let me scroll back up. See who was first. Oh, Daryl. Nice. Looks like a general question, but let's take a look at it. Where are financials going? Oh, Daryl. I'll tell you what. If I can answer that question, I will split the profits with you 50-50. How's that? I don't know where they're going. Now, let's take a look at it technically. I know that's a general question, Daryl. I'm just teasing you. All right. So descending triangle pattern, maybe, because I could actually draw an ascending triangle here. So we've got a symmetrical triangle pattern. We've got moving averages that have crossed. Let me get rid of that drawing. Yes. Actually, they crossed back correctly because of this last move up. But they're both sloping lower. Looks like it's having a little bit of a bounce today. It's going to be tough. What's going to be difficult about this, and this is why I think the SPY relates to sideways, is because we do have a pretty decent range. This could flex or breathe. It could breathe in, breathe out, breathe in, breathe out, and stay within a range of consolidation. I would be leaning a little bit more pessimistic, just basically where the price action is based on where it's come from. But I wouldn't be active to the bear side until I saw failure at one of these at this level. So sideways, that's my answer. Where are the financials going? Sideways until they break up or down. I should be an analyst. I make a lot of money doing that. Well, right now I'm cautious, but I'm optimistic in the long term. But short term, I am bearish. Right? Fun. Thanks for the question there. James, Amazon. This is one that people seem to really enjoy lately. Amazon is one of these ascending triangle kind of a breakout, or even if you wanted to call it a high base, or even a bull pullback. Boy, it's a messy one. But look at that bull pullback since the beginning of May. I'll zoom in a little bit more. Strong, outperforming. Seems like people want money in it. I played a short term this morning, but should be on people's watch list as it looks like it broke a key daily level. Yes. Just need to make sure it's not a fake out. And you're going to get that hesitation. In fact, Amazon, I think, was one that I was talking about. I think I did a short on this. I mean, a YouTube short on this. Okay, so right through here, yes, this is that key level you're talking about. It was a beautiful breakout. And now you've got this, okay, well, what do I do from here, which is healthy? The answer should be retrace or go sideways. So that's what's so beautiful about a butterfly spread, some sort of credit spread here, even a diagonal, letting it go. I think 120 sounds familiar to me. But that could be the longer term target. Shorter term wise, just kind of let it chomp around. It can come back and retest, which is fine. But that's a great candle. That should be a really good signal, and you should be pretty comfortable with that, James, as far as bullish. And yes, you're right. I mean, that's a pretty key area there for it to clear it. And it did clear it in a nice, comfortable, well, call it steady for Amazon, a steady way. Thanks, James. Okay. Day, but weaker stocks are significantly higher. Okay. Yeah, okay, let's take a look at some of these in examples here. Brett's got a question. Hey, we got a bullish day like today, but weaker stocks significantly higher. Let's take a look at some like BABA. Now, these could be just oversold bounces, short covering. BABA looks like it's been on a little bit of a trend. Let me go ahead as I'm going through your examples. Instro stocks are more sideways. Do you just brush it off as a one-day anomaly, or is there something else to it typically? Great question, Brett. And no, it's a one-day anomaly. And the reason being is because it's the overall trend of the stock. So BABA has been doing this little chompy move to the upside for a while. But what's its overall trend still? This is the stuff that I'm talking about. This is so hard to sit through. Let's say that you had a bear put spread here that you put on a week before this. Let's say you did the 85.80 for some reason, and here's your first 3 days. This still is in a downtrend. Now, the price action is a little bit more against you because it's above its 50-day moving average, but this could easily roll right over. And what you want to do is give it its best foot forward. Let's say that you had the 85.80 on this for the next month and a half. Why, to abandon it in the first 3 days just because it has a little outlying move is kind of a mistake. It literally could be just that little breath before it rolls right back down. I imagine people were a little bit worried here, right? Bounces up, both move, consolidate, and goes right back down, didn't it? It's kind of in its face. So, and maybe that was probably some sort of announcement, but yeah, just be patient with it. Let's go. I shouldn't say patient with it specific to this stock because you're not in it, but it's a great example. Let's take a look at A couple real quick here. PNC is another one, and Square. Square's been on my bear watch list for a while. Yeah, that's a one-day anomaly. Great question, Brett. Yes, and it is a one day. Do not let this impulsively pull you out of a position or put you into one thinking that, oh, hey, we're going to bust out. I mean, it's still below its resistance area. The volume hasn't finished. That's another thing to take a look at. Sorry, guys. Let me go ahead and zoom in on this. I just imagine you guys squinting down trying to see what I'm talking about. Volume isn't done, but if the volume is light there, then yes, it's just an oversold bounce. They happen all the time. And then let's take a look at Square. Square is something that was actually on our list here at this class last week, right? As a bear, and I still like it as a bear. I should have maybe just put it back up. But yeah, look at that. Beautiful channel down, 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 down. For you guys who got into this bearish, you're still good. One day up. Sure, it could go all the way back up to this 20-day moving average and this gap that it had back here at the beginning of April. Still be that would be a great bull or bear rally. Give opportunity to roll over and get into it again to the bear side. Great question, Brett. And it's hard to sit through these. It is. But the overall pattern should lead. Don't worry about intraday. John's got Spotify. This one's been a darling, right? These are these stocks that people just like, and they do well. We got what is that, May 26th, so next week, 145, 150 bull call spread. Awesome. Awesome. Great. Great, great. Good trade. Look at that. At this point, I kind of want it to slow down for you. It's like, ease up. It's only the 17th. You've got another week and a half, but that's okay. Even if it finishes up at 160, you're loving it. Let me put that down as a bull. I like it. I think that's the first trade we've talked about. Everything else were kind of just questions. All right, let's take a look at SPOT to the bull side, of course. And that's fine if we don't have a lot. It's been really interesting as of late, and I hope you guys are paying attention, because I have been, that a lot of the trades we talked about week to week to week are still viable. It's just a matter of catching them, right? All right, GDX. Thanks, John, by the way. We got another week and a half expiration, 3033 bear call. It's got a double top, just broke the 50 SMA. Let's take a look at all that. Oh, yeah. Okay. Okay. And you did say bear call. Good. Sideways to down, playing to credit. At first glance, I'm like, oh, that's counter trend. But it's, yeah, it's slipping. It's slipping. And I like the strikes, 30, 33, and he's got a credit spread, so it can take its time. Okay. Okay. And it's a gold. It's gold. So playing maybe that with the dollar, thinking if things get a little stronger, the dollar can stabilize here. Gold will roll over. That's fine. I'm just guessing here. I don't know much about GDX itself. If it's a miner more than it is versus the precious metal, or I don't know. There's so much. Commodities are not my strong suit, but I like it, Joe. Thanks. All right, John. Let's take a look at Eli Lilly. We got 430, 440 bull put spread. Okay. Jeez, man. Look at that thing just going gangbusters. Larger name companies. Anybody notice that? This is in healthcare. But larger name companies, then you see John Deere, right? Quite the opposite. What do you got here? 430, 440 bull put spread. Okay. Right there. Boy, you have to zoom in. Look how tight that is, though. 430, 440. Very nice. He wants it just to stay up in this area and a little higher, and he gets his full credit. Right? Excellent. Thanks, John. Let me put that down. Great trade. Okay, Felix got a couple here. VAL looks weak. Let's take a look. Says the utility sector is also dropping. It absolutely is. Ooh, look at this. Nice. Very nice. I don't want to zoom in too far because I like it looking at it here, but look at this. Nice rollover. Whoops. Sorry, guys. Bear rally. Looks like it's trying to confirm. It might take its time. I like it when stocks have repeatable patterns. See? I mean, that's a huge move right there. That's probably some sort of earnings or an announcement. But, a target of 55, even if it decides to chomp around here, that's where the credit spread comes in, 60, 55. Bear call, something like that. Yeah, let me put it down. Very nice, Felix. All right, he's got have a sideways on SLG. Look at that one. Okay, 2025 targeting 22.5. Okay, so it's in a range. Zoom in to get this range. Whoop. If I stretch it here, I can get, there we go, a little easier to see it. You're saying the range is between 20 and 25? Yeah, absolutely. Right around there, sure. And he's at 21.5, and look at that, it's at 21.84. Real estate. Okay, let's put it down. SLG. Sideways. Okay, one more here. Okay, diagonal spread question with high, low base pattern open a position if the price is basing or until a breakout. Great question. Okay, so I kind of mumbled through it, but Felix is asking, hey, when you're going to do a diagonal spread on a high or a low base, when do you enter it? And the answer is there's two ways to enter it. The first way is going to be, so I just figured you guys could take a look at what the market's doing while I'm talking. The first one is going to be time sensitive. If you are 3 days out from the call or the put you want to sell, then you might just want to go ahead and pull that trigger because you're going to have a time sensitive target on the back end. So if I'm doing a June and I'm going to sell what's this week's expiration, May 19th, then I would probably enter it today because I got to get in for those 3 days to decay. However, if I'm doing a June and I'm doing a May 26th, which is a week and a half from now, I might want to wait for a little bit more confirmation. So the answer is it's up to the trader, and I've seen traders do both, depending on how aggressive you want to get with your target. I do have traders that will sell right at the money and buy deeper in the money, knowing that it might fizzle out, go sideways, but if it shoots higher, they've got so much delta in that back leg, it doesn't matter. That would be a trader that doesn't need confirmation of price action. I hope that you follow me on that. But yeah, they both will work, so it's up to you. Now you have to come up with your own decision, I guess. Good question. Thanks, Felix. All right, Bud, if it breaks below 58 level to the downside, Dan, sure. Boy, we had TAP, Molson Coors, right? That was our bull, and boy, that thing just got mushed. I guess it missed its numbers. But yeah, same with this. Yeah, it looks like it's just kind of free falling. I know they've got some bad PR on it. I don't know if they had some bad numbers as well, but boy, TAP sure slid. But 58 level, he's thinking to the downside. Yes. Yeah, if it breaks below the 58, sure. That's a big support level, and it's really gone gangbusters. I imagine it'll try to consolidate here, so be patient with it, or slow play it. Why don't I put Budweiser on the bear, but put, what I mean by slow play, put some sort of a credit on it. It is Bud, right? Oh, that's funny. Okay. Yeah, I like it. Okay, moving on. A couple more here. KRE. It's turning around, or is it just taking a breather? Another one of those. What's going on? Yep. It's just taking a breather. Just taking a breather. It's very difficult because the buy and hold is screaming at you right now. This is the person that will actually, you know what? I should just go back to that chart. This is the person that focuses on this and realizes I have a chance to buy it here because it's definitely going back up to there, which is 100% false. But hey, buy and hold and talk to me in 6 years. Maybe it will get here, but it's sure as heck not going to get there anytime soon, barring any sort of weird event. But overall, the green candle today, or the move that it's had over the last few days, is it within? Has it changed anything to do with its overall trend? Well, here's consolidation. It's in an overall downtrend. It's broken down. It's just retesting. I would see this as more of a bear rally currently, even if it got back up to just below its 50. I could see that before it exhausts itself. Fair question, Dan. There's a lot of that out there. All right. What's up, Joe? TMUS, T-Mobile, getting killed on a large short position placed. 26, 140, 145, 150 call butterfly 2 days ago. It's killing me, he says. And yeah, it's fine. What's tough about this? Well, first of all, let's take a look at the trade. I want to make sure it made sense. 140, 145, 150, 145. Uh-huh. Okay, sure. And it was here. He was just going to play a little bit of a retracement up to this area. Sure, and it was technically in a bear rally from this area, but that's kind of, I believe, where you wanted it to park. Today, it could wipe itself back out. It could clean itself back up. It just depends on how bad the news is on it. But you know, it's also pretty interesting too, is how often this happens with this. I mean, it has no problem throwing in big red scares and then right back. Right? So I give it a few days. What do you got here, Joe? The expiration you put on 2 days ago, May 26th. You got plenty of time. Where you'd be worried is if it breaks through that 140 floor and continues lower. If this is indeed some sort of a short position being taken, shorts have to cover. Right? Have you ever heard of a short squeeze? So, I mean, I could see maybe this kind of chomps around a little bit and trying to revise this, but you're okay. The reason why you do a butterfly is for that leverage, as long as you didn't over position size. Thanks for sharing that, Joe. All right. Okay, cool. All right, looks like we finished up. Right? Decent length class today. Hopefully we guys got some good information. Shooting up. Take a look at that. Since we've been talking, these markets just today's their up day. Let's zoom in on this. And remember, I was just talking about the SPY and how I felt about that symmetrical triangle and what would make a difference to me to make it go to a +2 is up there. It looks like it's on its way up there, so we'll see. Okay. All right. Follow strength, follow weakness. If it looks weak and it's in a weak sector, sideways it first, then add the bear. If it's strong, it looks strong and it's in a strong sector, sideways it first, then add the bull, right? Let's see. There's Spotify, Eli Lilly. So we got a couple for today. Sideways on SLG. Let me finish typing these up here. And I'll cut you loose. GDX. And Bud. There, we'll play with those. Excellent. All right, so here's our list. Yep, there's our list. Pretty decent. It's been interesting how we only have 2 or 3, but they stay. They're staples. They last 2 or 3 weeks. They carry forward. So, all right, guys, I got to cut out, but thanks for joining me. And if you got any questions, you want to get a hold of me. We'll talk to you next time. Bye, folks.